Gold rates today opened higher at 72,214 rupees per 10 grams on April 15th and went on to touch an intraday high of almost 72,362 rupees per 10 grams within a few minutes of the commodity market's opening bell. In the international market, spot gold price is trading around $2,360 per troy ounce, which is around 0.7% higher from its Friday close. But why is gold hitting the roof? What is the reason? Hello, my name is Abhinav Trivedi and you are watching Mint Explains. Gold prices have been largely driven by escalating tensions between Iran and Israel amidst the ongoing Middle East crisis. Now, the geopolitical uncertainty has fueled a rush into safe haven assets, propelling gold prices up by 1.6%. Now, despite this sharp increase, the overall trend in gold remains bullish. After Israel's counterattack on Iran, the geopolitical tension in the Middle East has further escalated. Iran fired more than 300 drones and missiles at Israel, which Tehran said was in response to the April 1st strike on its consulate in Syria. Almost all Iranian drones and missiles were shot down by Israeli, US and the allied forces before they reached their targets, according to media reports. Now, let's come back to gold. India imports heavy amount of gold every year. The precious commodity, which has a bearing on the country's current account deficit, increased 26.7% to almost $36 billion during the April-December of the last year. As per government data, imports stood at $28.4 billion during the same period a year ago. Now, in December 2023, imports of gold jumped by almost 157% to $3 billion as per the data released by the Ministry of Commerce. And let me tell you, it's not only citizens but central banks across the world which are accumulating gold like anything over the last 2 years, especially post-COVID. Now, central banks added 39 tons of gold reserves in January of this year, with central banks of Turkey and China leading the charts, followed by India, Kazakhstan, Jordan and Czech Republic. In fact, Russian central bank has also been one of the key buyers of the precious commodity. Let's be frank here, if there is one asset class which has gotten investors' attention since the dawn of the human civilization, it's gold. In fact, whenever global uncertainties rise, the demand for gold also escalates. And why is that? Because gold is the original currency of the world, much before hard cash or the dollar. Till 1971, dollar, which is the reserve currency of the world, was backed by gold until Richard Nixon de-linked it. Until then, dollar reserves had to be backed by gold, but since 1971, dollar is free floating. But global traders, investors, governments, central banks and ordinary citizens still consider gold to be the safest asset. More than equity, more than debt, property, anything, gold is the most safest and precious asset. If one can't buy physical gold, instruments like gold ETFs take their place. Since the recent escalation of geopolitical crisis, the demand to rush towards safest asset and hedging tool has increased. With Middle East crisis set to escalate, Ukraine-Russia war, global inflation and economic slowdown, the world has become more unpredictable place than before. So, should you buy gold right now? Well, we don't suggest investments, but we did speak to Vijay Mehta of Mefcom Capital and this is what he had to say. Physical gold or gold ETFs are at a critical level and are commanding high premium rates. Not only this commodity but overall metals, real estate, crypto rates are all going up because of the geopolitical conditions. I won't buy the precious metal as cost of benefit ratio is shrinking. If one is expecting small gains, they may go and invest. But if one is looking for long term, this is not the right price. Gold is a hedge tool and the price might rise further. At present, I would neither buy the commodity nor would I sell the ones I have. So, all that glitters is gold or not for you? Please let us know in the comments section and stay tuned to Live Mint.